What's up, everybody, and welcome to Not Financial Advice. I'm Anthony Crudele, and these are my co-hosts, Canny and Jimmy Jude, and we're coming to you from the Place Your Trades Network, which hosts daily podcasts where we trade our yes or no picks for event contracts live on air. If you want to see all of our picks and get a chance to win weekly cash and prizes, go to placeyourtrades.com. And when you sign up, you'll get a free trade from our sponsor, Tradeovate. And in order to claim your free trade, you must open your Tradeovate account on placeyourtrades.com. Boys, it's been a year in the making since our first phone call. I called Jimmy Jude first. Sorry, Tommy. I know you hate me for this, but we made it. We're here.
We are here.
Amazing, dude. Yeah.
Proud of you, my friend. You did some good work.
Yeah, so dude. I appreciate all your hard work.
Oh, man, listen, I'm so excited about this. And awesome. You know what's funny, Jimmy, is that we come in today, you and I come in, we pour a drink, we're sitting back, relaxing. And next thing you know, Tom sits down, he's got a dress shirt and a tie on. He thought we were doing CNBC.
Jesus Christ.
And he had a run and turn on.
The worst thing about it was a short sleeve, like pocket tee, too. It's like an old man was one.
Dude, it's a hot shirt. I swear. You put that on with khakis and it's a tight look. I'm telling you. My wife likes Weezy thinks I look sharp with that thing.
You leave that shit up there. Don't bring that down south.
I just had to make sure that Tommy had a snack before we came on today because he gets hangry, Jimmy. I don't know if you know that about Tommy. He gets hangry.
I know. His blood sugar gets low. He needs a snack. He gets really cunty. I know he does. So I'm with you. I'm
Keep it up, boys. Keep it up. I can take it. I'm the man in the middle, though.
Yeah, you are the man in the middle. Well, we put the best in the middle. So let's talk about these markets right now. Let's talk about the markets a little bit, right? I think that, coming off of last week, everybody came in today bullish. I don't know about you guys. I really kind of did, but I was like, maybe looking for a bounce back rally. And you know what? Just kind of really deflated everybody. They come in today and, here we are. Maybe we'll start with you, Jimmy. What are you seeing out there? What do you think of this?
Well, you know what, like when I have like moments like this morning where you can't help yourself but to be a little bit of like, I want to play like this vicious bounce because the bounces are like, you make 50 handles in 2 seconds on a bounce, or you get your move really quick in a counter trend rally here because the squeezes are so nasty. But, you got to time that shit perfectly. So like one of the things that I like today, like it's all about rates and the dollar. You know what I mean? As long as you're seeing rates in the dollar make their moves against the market, then you have to, which we saw like pretty early, you know what I mean? Like we saw the pound move last night prior to the open, so as long as that's going on, these I think we're going to break out to the upside. As the great thing about this market is that there's ancillary markets right now that'll tell you whether or not you're right or wrong in the morning. You know what I mean? You can gauge these moments, and squeezes are going to happen probably in the markets, the main ancillary driver markets like rates and dollar. The squeezes are going to start there and spread into the S&Ps. So as long as they're not happening there, it gives you that little barometer of like, maybe it's not happening today. You know what I mean? If that makes any sense.
So what's the first thing you're looking at when you're coming in the morning? Is it rates in dollar?
Yeah, every morning, and it's like, and you have to almost go like one step beyond just like, looking at the 2s or the 10s. Although you can just kind of look at the front of the curve like that and see, the way they're trading. But then a little more sophisticated, you can start to look at the real front of the curve and the Eurodollars and the Eurodollar front of the curve, which is, it's on all these different trading or charting platforms, But that's the stuff that's like super sensitive to what the Fed is saying. Like that, like the Eurodollar curve just dropped 100 basis points from that, like they're the stupidly way they were being priced a month ago. But that's a fucking big move. You know what I mean? Like, you have to see that move stop before you're confident there's going to be some counter trend rally in the S&Ps.
So how many things do I have to look at when I come in the morning now, Jimmy? Like I don't look at any of that shit. I don't look at any of it. I don't even know what you're talking about. Like, golly, dude. Like, don't make me work that hard. Seriously. Like, I just want to wake up, look at the chart, see what price is doing, and get involved. Like,
I know.
We started out way too hot. Tony, we started out way too hot this morning. Way too hot off the open. Firing up like that. So it got me really nervous. I was excited. Listen, everybody's looking for a rally at this point. Like, everybody's looking for that major short squeeze, choke your head off type rally that's just going to run and you could capitalize on it. Almost like too many people are looking for it. And so when it fired right out of the gate, it went straight up into resistance. Like, there's just walls of resistance right now that's stacked, both in NQ and an ES. And I also look at it on the SPY and on the Qs, since I'm, the token stock guy. But when it went straight up into resistance this morning, it was kind of you could feel it. It was a dead trade. It jammed up into there, and the AD line was nothing impressive. And so,
right. And
you
got
the sense that it didn't have what it needed to follow through. That's all I look at.
Right.
I don't, euro dollars. Can you give me that symbol?
There's so many
I don't even know
layers
what
to
that
that.
symbol is.
But there's so many layers to that. Like, exactly like what you just said is like absolutely right. And like, you got that feeling without even looking at that shit. You know what I mean?
Right.
So here's like two things that I looked at this morning on top of what you were looking at, but I wasn't looking at what you were looking at. You know what I mean? And I still had like decent conviction, was the fact that rates, okay, the dollar had definitely like retraced a little bit, but rates were still like, jamming right along on their highs, or the bonds on their lows, no matter, depends on how you look at that bullshit. But, and as in this morning, like, we came up into like Friday's opening range and like died in Friday's opening range, so there's so many of these like nuances where like, okay, so my main ancillary rates weren't improving as we were rallying into the opening range on Friday, and all of Tommy's metrics that he just mentioned were turning over as well. So like that's good trading. There's stuff like that, and there's setup. That's a decent setup. Those are good. And that's like this type of stuff where you're looking at what you're looking at. That's completely different from what I'm looking at, but we're seeing the same thing. And when that shit, like, those are the best trades, when like all the planets line up like that. It's only the matter of like, literally, when you're selling that spike this morning, all you're thinking of is, because of the last couple of weeks that have traded, are they going to, like, how hard are they going to squeeze me here? You know what I mean? Are they going to squeeze me through the top of Friday's opening range? Are they going to squeeze me through the next swing?
It barely tickled the underbelly of Friday's range. Like, it came up and it like just kind of went a little bit, and then it couldn't hold it. And so from there, I'm just like, listen, I'm the be dumb follow price guy, and price is down. Everything's down. Every chart you look at is down, save maybe like 12 charts, stock charts. Everything else just looks horrible. Commodities look horrible. And so it's like, you just keep fading strength at key levels until it stops working. I hate shorting. I'm not much of a shorter. I don't teach shorting. I don't really know how to short very well. So I scalp it when I'm trading. Like, I don't do a whole lot of day trading, but when I do, because it's the only thing I can do, because there's no swing trading, there's no position trading right now. So I'm just like nibbling. That's what I did this morning. I just sat there and just like chipped away on the short side until I was like, that's enough. And then I left. But it's,
you know what I'm thinking? I wonder if Tommy wore Jimmy's glasses, that maybe he would be able to start looking at the euro dollars and the VIX curves and all that stuff. I'm thinking that maybe
how much smarter I would be? Dude, you got to send me a pair of those. I would look at the euro dollar. If you could give me the symbol for euro dollars, I would look at the euro dollar. Is that another data feed I'm going to have to pay for, though? That's a fair question. I don't know. Like, I know how to find the index futures. I got that game down. But beyond that, bonds.
You know what?
You're going to make me look at the 10-year? Really?
Right.
But come on.
But right now, this is like 1997. You know what I mean? Like shit. Like all these things matter like massively. You know what I mean? And like every morning, like I identify like what's my main ancillary, and every morning right now it's either a fucking violent move in the dollar, or it's a violent move in rates, or it's both. And I know that like as long as that's happening, I don't even really like. I know, you know, I'm either sell the rip or buy the dip. You know what I mean? But I know like my bread and butter is really in selling the rip properly, as long as these trends continue in rates in the dollar. They're super stretched, just like everything else is stretched right now. So like that's why we're getting that feeling like, oh man, I want to catch this bounce. But they haven't turned yet. So and you know, like yeah.
Well, I was just going to say, I mean, it's like, I think what's cool and what'll be cool long term about what we're doing on this show is that like you're looking at the market. We tend to come up with a lot of really consistent, similar conclusions to what's going on. And I'm not looking at anything you look at. Absolutely.
Right.
Almost none of it. You know, I'm gauging it based off of, I'm watching what I define as the leading stocks of the current market, and their price action and their behavior and what their charts look like, and then what their actual price action is in the first 30 to 45 minutes of a day in conjunction with what's going on in the NASDAQ. And I come to the exact same conclusions that you're coming to. So it's
right.
That's the thing that I love when you and I talk. I love that about the synergies that we have, because you're talking about shit that I just like, I fall sound asleep and then I wake up and I'm like, what's your conclusion? Because I don't know what you're talking about. And it ends up,
right.
I learn, but it ends up, it's like my eyes get glossed over because I'm like, I don't even know what I feel stupid, but that's okay. That's okay.
And I'm a combo of the two of you. Like I don't look at it as deep as Jimmy does, because I'm always interested in what he's looking at with like VIX and curves, and because he obviously understands options markets, which I don't.
I think that's just fascinating.
And he comes from euro dollars. I started in euro dollars, but I got out of there so fast, Jimmy, because I looked around and I was like, dude, I am the dumbest person in this pit. I got to get out of here quick. So I went to the S&P, to where I fell home a little bit. And, so I am somebody who looks at the general things, but then I also like to feel, I would say, the be done follow price like Tommy. So I think a combination of the two is definitely me between the two of you. But I want to move on. I want to talk about something. I think everybody kind of gets the gauge of what we're looking at with the market here, but something that the three of us, when we first started talking about these event contracts at CME, we had this discussion and I said, guys, look, this is coming out. I remember we talked, I think it was back in March or April. And we said, this is going to be coming out in September. And, we all thought this was a great idea. And it's funny, like right now you'll see some people, Merritt talked about it a little bit this morning, where some people are saying, why were these guys trading this? Is this all they're trading? And I was clarified last night where I said, even when I was on J&J, I said, you know what? I said, this is not something that we're looking to overtake what we do as traders. We just talked about the way that we look at the market, and the way that we trade. But these products have allowed us to be simple in the decision making and add an element to our trading. And it also opens the door to, I think, everybody. And it's funny seeing some people, hate on it because they think that it's gambling, as I always say, is, well, so a fixed risk event contract versus slinging E-mini S&Ps or NASDAQ during the day. you know, right. Because that's not risky. Okay, you know, I mean, on Fed Day, if they could, I was swinging on Fed Day, you know, my heart was pumping, and you know, Tommy, you and I, we're heart guys, heart attack guys.
Yeah, we are.
We can't.
You got to be careful of that shit.
Yeah. So I think that, you know, for me, I've said a lot about this, but I just want to hear from you two guys, two veterans, been doing this longer than I have. You've seen a ton, you know. I mean, maybe we'll go to you first, Jimmy. I mean, when I first talked about these and you're hearing what other people are saying, you know, and some people are saying, you know, good, and some people are saying bad. What are your thoughts on these event contracts?
Like, I think the, you know, I've traded basically the same concept as these event contracts. And I've done it manually. Basically, like the way, you know, if you wanted to reproduce it, you would have to go into the weekly options. And because they're like capped out, they're basically like put spreads and call spreads. They're not calls and puts. You know what I mean? Because you're capped out. You're hitting an area, you know. So you know your downside, you know your upside. Those are basically spreads, okay? Now, if you try to like leg those spreads in the EWs, it's not simple, okay? They are liquid, but they move really quickly, and everyone thinks that, you know, they can come in and do whatever they want to do in them. I know the CME. The CME is the creme de la creme of exchanges. You know, everyone, they demand integrity out of the people that play and make markets in their products. The spreads are going to be tight. The players that are come in and make markets on this stuff are going to be tight. They're going to tighten this stuff up. You're not going to be far off from actually just, you know, the price that you would get if you just went into the EWs and legged them. And yet this product allows you to play like areas in the same way that you would play an option, but do it super simple. And it's not like you have to say yes or no at any point. You can work a bid and offer in your yes and no, just like you would work it in an option spread that you were playing. So you can, you know, you can like kind of cage the market the way I would, you know, I want to trade these the exact same way I trade option spreads, especially on an intraday basis. And playing option spreads on an intraday basis is super fun because you get to like play your ideas, but you're always capped out on your risk. You know what your risk is. You know, that's the beauty about options. This is kind of like beginner options. So you get the feel of how like, oh, okay, now I see how these guys are controlling the risk, because you don't necessarily, like, this product is very expansive. There's a lot of different things. You can treat it as an option. Like, you could say like yes to this strike, but no to that strike, and you could do it by like 1/3. You know, there's all sorts of ratios you could do and everything. This is an expansive strategy, more than just yes and no. And real players will understand this, and people new to the market will understand it as well, which is the beauty of the product, the simplicity. I've always like loved, like, all my strategies have always been based in simplicity. So I love a product like this where you know, there's a lot of people out there too that like, hey man, I feel like I can call the market, but every day I start trading and I get fucked up, and next thing I know, I'm doing this and that, and then I get off the beaten path, and then, you know, and they fuck up the day in between their final thoughts. Well, this is kind of like a product where you can play your final thoughts too, and it's not necessarily your final thoughts. It could be your major thoughts. You know, like, we're not going out of this range, so I'm gonna say yes to this and this, you know, like, there's so many different ways to play it, but it is basic. You know, you're basically trading options in a very simple manner. You're dipping your toe into that market, and you're doing it safely, and you're doing it with an exchange like CME, where you know the integrity of the market is going to be there.
You know, Tommy, you're not the futures guy, right? Jimmy's futures and options. I'm pretty much only futures. and you're the stock guy. And when I talk to you about this, you're like, you know what, Tony, this is something that I could do because, you do trade some micros and some SMEs every now and then. That's not your forte. This you said has fit you a little more.
Yeah, I love it because it's like, A, it's based in simplicity. B, it kind of gives me something to do during, like, I'm normally a swing position trader, mostly long. So there's nothing for me to do right now, but I need to stay in touch with the market. This is a great way for me in a non-leveraged way to feel the market, and to kind of gauge my sense of things. But it's just, listen, it's so simple. Jimmy said it. It's so simple. It's such an easy access point for new traders, for stock traders that are trying to get a little bit more exposure to indexes and futures. It's got the same tax treatment as futures, which is great. So I really enjoy it. It's fun. It's different. I know there's a lot of esoteric purist futures guys that think that there's something wrong with it. Whatever. Who cares? Everybody, there's always somebody that's going to want to shit on something new, and that's fine.
Think of this too. Think of this. Think of you can actually, this product allows you to sell options, basically sell call spreads and sell put spreads synthetically. What product allows dudes to do that? There's nothing out there like that allows you to say, on an intraday basis, no, it's not going here. And you know what I mean? For size, and you can sell it for size. That's, and for a guy like you that who trades swings and is kind of like a long player, now you get a whole different, set of trades where you can go the other way. You know what I mean? You can, or you can fund trades by selling shit, downside.
Yeah, there's all kinds of combinations that you can do. Yeah, and I think the cool opportunity is, especially in the afternoon, sometimes you get wicked moves either up or down in the afternoon if price action sets up, and you're going to have some incredibly cheap sides of a trade that you can grab, and you can if you get that move, those are 6, 7, 8-to-1 type trades, and you can take them all the time, and if you're right, 2 out of 10 times you're still making money. So yeah. It's just got a lot of different combinations and a lot of different styles. I'm still playing with it. I'm still trying to figure out where it fits, but I really like it conceptually, and I like it. My member, I got a lot of new people that I'm teaching, and this is something that fits because you don't have to be as precise. You don't. Entries and exits are not quite as demanding within this structure. It's more of a, where do you think the market's going to end up during the day? And if you could I did this for today. I said it last night in the notes. I straddled both sides. I just thought there was going to be volatility. So I said, yes, it's going to close above 11.5 on the NASDAQ. And no, it's not going to close above 11.3 on the NASDAQ. So I had both on the outside. And we went all the way up through there. And so I covered that one off. And then it went all the way down. And I covered that one off. So it's just I just played the volatility by saying yes to both of them and then just trading whichever one worked out. So there's a lot, and I'm just trying that. It's just, there's a lot of different ways to use this product in an effective way, and it's so damn simple. I just love that. It's is Connor McDavid going to score 2 goals tonight? Yes or no?
You're right. And you know what? It's simple, but make no mistake, you are taking a market position, and you can take it for any fucking size you want. You know what I mean?
You can take it for $20. You can take it for
$20, or you can take it for $1,000. Whatever. You can take it for size. The depth of this market. So it's yes and no. But if the more you get into it, the more you're going to realize that wait a minute, I can actually, this is yes and no, but I can collar my risk with this shit. Intraday.
You can scale too,
and I can lean into it with size.
Yeah, that's a cool. So there's just a lot of ways. Hey, come on, it's new, so we're learning and we're messing with it, and it's great. But there's a lot of different ways. I did a lot of scaling today with it, and it was just I was just buying 10 at a time, 10 at a time, 10 at a time, and I got up to 50 at one point on the 11.3. because they got so cheap. They got so cheap when the market was roaring that I'm like, I'm going to add into that position. I'm going to cover off the fives, but I'm going to add into the loan because if it hits, it's paying me. I was able to buy them for under $3.
Yeah, 7-1.
And that's the thing too, is you can play that. You can play the ebbs and flows of the market through
every trade.
For every trade. Like you don't want to be you don't want to be buying upside in a spike. You don't want to be, you know what I mean? Like, zig when they zag in these markets to get that good price on your idea, Right. And unlike a futures, you don't have to, you throw futures on, you could be right and still take a 30 handle, like squeeze in the mouth, like at any moment in this market and barf yourself out. But when you trade this when you trade this is like trading option spreads, where you're like, even when you're like, oh fuck, I'm taking a little bit of heat on this, you take a little bit of heat on this, but you're not out of the game until the end of the day. You still, like, all right, this is an ebb and flow. We're coming back down to this point. Maybe you timed them a little bit wrong, but where you are in the grand scope of the game without like being in a futures contract, which is an end all be all thing. You know what I mean? It's like,
Tony, you're quiet over there.
Yeah, well, I was just saying, I'm looking at what I did today. So like the 36.75s near the close. People always talk about, towards the end of the day, are you going to lose? Like I guess there's with like time decay and stuff like that, right? But at the end of the day, right around the 36.75s, I was able to buy like around. I paid $6.50. And at this for the no's, and then the yeses, I was able to buy for like $7 or $8. So they kept like bopping around. And what happened was I basically just paid $14, and no matter what, I made money because they were both flying around, and no one knew if they're going to close above or below 75.
Yeah.
So I basically look at it and go, I could just keep it. Originally, I bought the no's like it's going to be bearish. And then I said, you know what? The yeses are getting cracked now. We still could just print, because remember, they're all based upon settlement, and people are asking, what's the product? Go to placeyourtrades.com, and we have all these sorts of.
You locked in and then you locked it in with that trade,
right? Because the thing is, Jimmy, I don't want to get one ticked on the close, and who knows better than you on settlement, right? Settle them here, baby. So when there's trading around us. It could be, you could almost just, you just buy the yes and buy the no. If the two combined are less than $20, you collect.
You're making money.
It's going to make you, one of them pays you 20, you lose the other one. So I ended up paying
there could be guys that just love to trade this right within 15 minutes of the close. You know what I mean? Back and forth. Yeah, because all like what they call like the Greeks are out of the options. You know what I mean? There's no theta anymore. They're just basically like a pure option play where you're just, you know what I mean, going back and forth. And that's just like that's perfect for guys like me and Tommy, where we pick up patterns. You know what I mean? And that like wiggle.
The thing I found out today was, like, I got a bunch of those 11.3 no's, and the market started dropping. It came down to about 11.350 with it. I don't know what the time was, but I covered those off, half of them, and the other half I said, okay, I'm going to see if we flush below 11.3, and it just kind of kept dropping and I was like a kid. I was having so much fun. I mean, it was fun. I'm like screaming at the market to crash. I'm just like, die, motherfucker, die! Come on! And I did. I ate shit on those, but it was. But I'm like, I've got 20 contracts. I've got $200 involved, and it's like, and I was. You'd have thought I had 30,000 in it. I was like, but it was. I was really in it. Here, the thing that Jimmy, you and I talked about is like, for me, it helps me stay engaged in what's going on in the market. When my stuff's not active, it's a great tool for engagement for me to keep track of what's going on in the market and keep my finger on the pulse. And I really appreciate about that about this product, because it's fun and it's different.
Yeah.
I
told Tommy earlier.
There's a big place for it in a lot of different types of traders' portfolios.
I'm going to shift gears.
Okay.
You got something?
I'm sorry. Go ahead.
I just want to shift gears here a little bit. So one of the segments that we're going to be doing in the show is we're going to be doing some fun stuff. Number one, tonight we ran a poll on Twitter. Make sure you voted in that. I'm going to get to that in a second. I only ran it for 20 minutes, but we'll see what the votes are on that. And also, one of the segments we're going to go to, the three of us love Twitter, everybody, and that's a big thing that we do. Most of you are here probably because, following one of the three of us on Twitter. We're going to pick our favorite tweet of the day. Maybe we're going to... and maybe we'll get into what is the dumbest tweet and all these other sorts of stuff, and we're going to bring FinTwit into this in a way. And so today, what I want to do is, Savannah, let's go to the screens here. This is our boy PIQ. God, I love this guy. And everybody's talking about the pound. And if you haven't seen this tweet, I think this is the funniest tweet.
That guy's fucking beautiful. I love that.
This guy is. I love Ryan.
Oh, that's classy. That is classy.
He's magnificent. Yeah. If the only reason I want to go to England to just see my fellas from Twitter. You know what I mean? I want to breeze in for the weekend and party with SZ, party with Ryan, party with Bell, and get the fuck out of there. And before I want
to go to England and I want to go to Australia. That's the other place I want to go to hang out with some of my Twitter followers because those guys are awesome over there.
Dude, the Australians are terrific, aren't they?
They're so good. So good.
But this Ryan guy, he's a prince. I love that fucking guy.
He is. I mean, if you don't follow PIQ, I don't know what to say to you. This guy is great.
Let's play some bets.
So we're gonna go that in a second. So let's take a look at the poll. Is the S&P and NASDAQ high in for the week? Yes or no? And look at this, guys. Before we go make picks, here you go. Right. I mean, everybody is so bullish. It's just like even when I was on with J&J, even this morning, Merritt, he was bullish. He bought the 3750s before the open. Everybody, pretty much everybody we follow and talk to is bullish. I mean, there's a lot of people that are definitely still bearish on the big picture, but everyone's waiting for the bounce. I mean, look at the poll.
Everybody's short-term bullish. I think it's coming.
Yeah.
All right, let's go to the market. Let's make picks. All right, boys. So a couple of things here. First off, what I figured we do for the first show is I'm going to go over all the different event contracts. Remember, everybody, you get a free trade at placeyourtrades.com from Trade-Evade. Go there and sign up through our site. The only way to get is to sign up through our site. I'm on the Trade-Evade app right now, and I'm going to go over all the different markets. And I'm going to start with the ones that most likely none of us trade, but these are the ones that are available. So I'm just going to read them to you guys and see what you guys think. If you even want to talk about a trade, or you just say pass because you don't look at it. Copper.
Pass.
Yeah, I wouldn't buy. Copper obviously. I'm not a copper guy. I know some metals, but I'm like copper. I don't know. I'm not.
All right. Here's the only way that I'll trade silver.
Why do you start with copper? Silver. Silver looks like absolute dog shit. There's, when a chart looks like dog shit, you got to wait for it. I don't buy dog shit charts, so I would be selling rips and shooting for downside until it changes its sequence.
All three of those charts, I'm not doing anything until they bounce, and when they bounce, I'm selling them. They look look terrible.
I would only be taking those in silver to start right now. What about natural gas? Yeah. This animal, another market that I won't trade on its own.
Natty showed some life today. Like that actually could could bounce soon. And if you're gonna look at natural gas and you're gonna trade like these wild swings right now, like you got to look at two spreads, the Occ-Jan spread and the March-April spread, to kind of give you a barometer. Those are called like the shoulder month spreads, where they, you're coming out of summer and into winter, and you're coming out of winter and into spring. and those kind of lead the natural gas markets. Those spreads do. So those would be like your ancillaries if you're going to fuck with this market. You know,
every fucking stock guy on the planet has this look on their face right now.
I know.
Listen,
sorry.
Jimmy, we got to get Canny. When you start, we need to get Canny these glasses to make him look smarter. He's feeling he's not feeling very smart without those glasses.
I can't help myself but say shit like that, and I know it's like
right.
I'm probably
that shit works. I apologize. I just don't know what it is.
Natural gas ruined my life for like 6 years. I know a couple of things about it. You know what I mean? Euro, you dated that you just couldn't tame.
Jimmy, you want to comment on the euro? Jimmy looks like he should be reading the Wall Street Journal with those glasses right now, Canny, don't you think?
The euro, you know.
Like I've never taken him seriously, never. And now he's talking like he's a fucking professor or something. It's like, I don't know what to do with him. Like it's like, I don't know how to engage you right now. It's like usually we're talking about weed or what whiskey we want to drink that night.
Come on, my kids are gonna watch this, guys. Your kids are old enough; they know you smoke weed. My kids don't know I smoke weed yet.
There's been no bros, bro.
Actually, smoking weed
no homies, nothing.
No,
determine all
nothing.
This
He's given us nothing tonight, Canny.
We get a few, you know what I mean, and that's about it. That's just the only little flavor we get of him. Like, who are you trying to impress? Seriously, Jimmy, who's watching this show that is checking you out for like a portfolio manager position or something? Like, fuck, man, who are you?
You think someone will hire me for a portfolio manager position? Come on.
I would.
No one's going to have me in their office.
Russell. I like the nose and Russell.
Yeah, Russell's fucked.
Terrible.
By the way, I think.
Yeah, I was just gonna say. I mean, until we overcome these stacks of resistance. I mean, we're not looking at charts, but I mean, it's just like there's layers of resistance that have gotten built in. There's a major layer and there's a bunch of minor ones. We ticked the bottom edge of the minor resistance. And the buyers just gave up instantly today. So it was like, wow.
You know, here's something interesting on the Russell. The Russell's pretty tight around them. I haven't traded this one yet. So right now at the money's, or the current strike is 1660. Then it goes to 1670, which $10 is. Then it goes to 1675. Those are really tight strikes. Then it jumps to 1700. But it's like the 1700 nose is $17.
The Russell chart looks worse than any of them, right?
Than any of them. That's my point. So it's like you can buy. Here's what I think is interesting. I don't know what you think about this, Jimmy and Canny. Is that so the 1700s are a no. You could probably get for around $16.50, but you make $3.50. I know that's why would you pay that much? But you'd have to rally $40 tomorrow from here to close above it. So it's almost like those ones where it's like if you're just really bearish and you just think it's just gonna maybe it rallies, but you want to stay in something. Yeah, you got to pay up, but at the end of the day, it's an unlikely thing where I think you can still, it's one of those things.
And Russell's like the quintessential market where rates and dollar needs to move and back off their scary levels before you get that back, before you get any significant bounce in the Russell. You know what I mean?
Right.
Yeah.
So you can play that off rates and dollar. You know what I mean? Those are your main ancillaries. It's always I always need I need an ancillary. I need something to be looking at to make my decisions. I can't just be making my decisions off chart points because they're fucking bullshit and they always fuck you. But if you marry a chart point with your ancillary, you know what I mean? That's when you start stacking the odds in your favor and you start getting these high probability trades,
Hey, Canny, Wall Street Jingle said, longtime listener, first time caller. Jimmy is 666 low safe in SPX.
Jingle.
Yes or no?
I love that kid. I love Jingles. He's fun. He's a funny bastard, that guy.
We got to get him on the podcast. Hey, Jingle, you want to come on with us three?
He does, actually. He's very interested. He wants to make sure it's not a camera.
We got to
stay mysterious.
I see him first. He can't have better hair than me, Jimmy. There's no way I'm letting this guy in. No way.
No, by the way, we haven't talked about your hair yet. Like, you have gone into full hurricane mode with that fucking thing. Like, what did you spray that with? Lacquer tonight? Like, that could withstand, that hairdo right now could withstand like a Cat 4. You could go outside and it wouldn't even move. So I know you're in hurricane mode, aren't you?
It's because it's aerodynamic.
Is that just, is there like butch wax involved in the front? Is there pomade or is it just
by NASCAR drivers? It's been studied. It's a perfect blow dry, and it's actually it's flexible.
That's so good.
It's flexible.
What's crazy is seeing those pictures of you when you're young with like the full like afro wig. Like you know what I mean? Because most guys, if they have a pompadour, they've had the pompadour their entire life and they just rock it. And that's their dad had one, all their buddies have one. But there's pictures of you out there with like lettuce flying in all directions. Like you went through like a hippie stage, and most pompadour guys don't allow that stage. So that's interesting. Yeah.
Well, it was called.
You're still a hippie, Jude. You were born a hippie.
What's that?
You're still a hippie. You're still.
No. I used to have a pompadour, dude. I used to have a full-on
you had
Italian.
That thing?
Yeah, I had something similar to that. Yeah.
Now you got some nice curl in your hair. Really,
when I was in college.
The hair that both of you have is so intimidating. You've got hair and tan, and I'm sitting here. I'm the white guy that's got the. Get pale white with the thin hair.
We're gonna get some color on you, bro. You're coming down.
Yeah, we're working on it.
We're living here for the for the winter, right?
I spray tanned before the show today, and I still look like 11 shades lighter than both of you. It's horrible.
Did you really?
My wife gave me some stuff, and I rubbed it all over my face. Just caked it on. This is as good as I could get.
There's no way his wife lets him go out of the house without SPF 50 on. Does she spray? Does Wheezy hit you with the SPF before you go out? Like get you in all the different areas?
She like walked after me and just like squirts it on me and stuff. And yeah, she does. God bless her. I appreciate that.
My wife says things to me where I'm like, every time she says it to me, I'm like, shut the fuck up. You know, or I don't even say that. I just kind of look at her. And that's when I'm at the beach and she's like, hey, put some sunscreen on, or when I'm at a party and she's like, hey, listen, don't drink too much. You know, both things. I'm like, listen.
Yeah. Do you listen? You don't listen to either one of those, do you?
Shut the fuck up, all right? I got this.
Are we gonna play some bets? Tony, we gotta play some bets.
So I'm getting ready. I'm gonna buy some of the Russells. I'm gonna buy the 1675s. Their nose are at 1250. And one thing I will tell you guys this at night, especially to start. You can work a limit. I mean, you could just go ahead and buy the S at 1250, which I'm going to because I don't think it's that big of a deal. But if you want to wait, like maybe you think it's going to come back down to $10, you can work it at $10. So I just bought a few. Actually, and bought them at 1250. So I bought some there. 2 left. Well, 3 left. Crude oil. This is the one I bought this morning. I bought the crude oil this morning. And this crude oil just can't hold the rally. You got hurricane, all sorts of stuff going on. Another market I like this for, like if it's just going to be bullish, it's one of those things where I'm like, just buy the yeses versus me trying to sit there and trade it, which I will trade it as well. But I like this just to be long, in a sense. Crude oil just can't hold any rally. It's terrible.
Nope. No. There's something else we don't know. I feel that way about a lot of different things in the market right now. Like there's just. The market's trading on information that we don't know right now because we're not getting natural flow. Like the whole world thinks that crude oil is supposed to be at 130 and it just can't catch a bid.
It's like when you see crude and you see equities and you see gold and you see silver, everything tanking, it's just like, all right, all assets are fucked right now. you know, and all assets are going to have heat on them until the data tortures the shorts and the Fed, you know what I mean? Until we see that, like, that data back off, you know, and like, you know, everyone thought the data would back off like this month with the CPI. It didn't, you know, and I don't want to beat a dead horse because this is what everyone is fucking talking about ad nauseum right now. But we really are, like, you know, we're stuck. Like, as much as you want to, like, look at these and say, oh, Jesus Christ, this is oversold, or this is that, or this is the, you know, like, we are in a moment where, like, the dollar and these moves in rates and in the FX market can actually, like, break something and fuck this up beyond belief, where it's like we could have a day where it's like, holy Jesus Christ, you know what I mean? We're at that moment right now, you know, in FX and rates. So that's why all these charts look like dog shit too. Until we see, like, we need to see a break in data. We need to see a break in, you know, like, something, because this whole, like, when you know, he one-upped this thing with his, like, he out-hawked the Hawks. Like, I don't know if it was necessary to out-hawk the Hawks at this point, but he did. And when he did that, now, you know, like, we either have to hear from one of these guys, something has to break, a level has to scare the fuck out of someone. We have a ton of Fed speakers this week. We have more than enough of these guys to backtrack in case we, like, lose 3,700 hard here in the S&Ps and rates keep spiking and it gets scary. You know, at least we have Fed speakers to maybe backdrop that. But we also have on, like, Friday, we have that PCE, which is like, Jesus Christ, if that doesn't, like, provide some relief, like, oof, you know, this is going to get weirder and weirder and weirder. And this is, like, I already thought, like, I went through 97 and traded, like, you know, the Asian crisis and the Russian ruble shit show and everything. Like, I honestly thought, like, if FX moved the way it's moved in the last 2 weeks, like, we would have heard something break by now. That would have been my base case. Like, holy shit, like, something is going to break here, you know. And they're driving it so aggressively. You're almost like, dude, is that your base case? Do you want something to break so you can, like, print again? You know what I mean? It's they're driving it so aggressively like that to this scary point where, you know, I'm not sure what happens, you know, going forward. But I know that until I see rates and FX back off, I'm a no on the upside and I'm a yes on the downside. You know, I'm a sell the rip guy. Just a pattern.
It's we're in a time where, you know, I keep going back to this stuff, but, like, for me, I'm not getting a ton of setups. A lot of my strategy is built on mean reversion. So what happens is like, you know, after a day like Friday comes in on a Monday, like my setup on my 60 minutes always usually a long, you know, which it'll work for a little bit, and then, like, it just all of a sudden it fails. It's like, it's so hard for me to even want to follow my strategy in a time where I look at everything and you've been around and you just go, I have a long setup. And now, Tommy, you talk about this in your letter all the time. Just because, like, you have a technical setup or something sets up, what do we always talk about? I mean, you drill this more than anybody, is environment. The environment is really hard for long. So you have to go to the cheapest way to make that play. And that's one of the things I like. Like, even today, like, I bought the 3750s with Merit this morning. I was trying to buy some yeses. Obviously, I've been trading a bunch of this stuff, but it keeps me going without making me, you know, especially when I'm counter trend trading. I think I'm going to like this the most. Like on that Friday afternoon, Jimmy, when I put that tweet out where I'm like, they might squeeze them. You know, I bought those for $2.5, $3, you know, and next thing you know, it's ripping higher. It's like, okay, you know, versus me trying to be long, I'd have puked them after it went a few bucks my way. You know, I'm not going to hold them because I don't believe in it. I get a weak hand in longs all the time. So that brings us to the big boys.
And there's spreads. They're call spreads and put spreads. You know what I mean? You're taking shots on areas and you're defining your risk every time you do it, which is like
every time.
part of the other.
Yeah. Here's the last two for the night, boys. So we've got NASDAQ and S&P. We'll do NASDAQ. NASDAQ, to me, actually looks the best for a bounce when I look at it, even on my stuff. I feel like the NASDAQ is the one I would be taking guesses in on weakness, so see where they come in tomorrow. But 11.3 is a strike. And right now, just like when I was on with J&J last night.
What's the strike below 11.3?
It's $100. It's 11.2. So the yes is 14.75. But so 11.3 right now, the yes is $12. And what I think is interesting, it's 20 something points above 11.3, which to me is already priced in, and they're bidding up the yes on NASDAQ on this. So they're basically saying that if you want the yes, you're going to have to pay up already, which is interesting. When you look at NASDAQ, it's not like that for Russell. So I think there's a sentiment thing here too.
And you know what? That's no like I don't want people to look at like when you have to pay up for that's no different than whether you're in any market. Skew can change, and if the opinion runs one way and it's obvious, the market makers aren't fucking idiots. They're going to back off, and they're going to like it's not like every time the market moves like that, it's not like, oh Jesus, these things are bullshit, this is a scam. No, this is a market. That's the way the options market. I was an option market maker, you know what I mean? Like anyone came after anything, I was immediately backing off, so you have to understand that, like, if you're going to buy them in the heat of the moment, you're going to see the market makers back off you. But if you're going to buy them when they hate them and sell them when they love them, you're not going to have any problem if you get in the right rhythm, with the market that you're facing.
Tony, I want to do the same thing I did yesterday. I'm going to buy the yes. What's the price on the 11.4s?
So I just bought the 11.7 yeses for 11.75 at 112 now. So I'm up a quarter tick. Maybe I'll cover them. No, the 11.4s, the yeses are 8.75. Those are 12.50.
Okay, so I'm gonna buy that, and I also want to buy the no at 11.2.
So you want to buy the out of the money yes, and then you want to buy the.
I'm swinging it, and the plan is to cover the side that hits first. So if we're weak and we flush 11.2, when it gets down 50 points below 11.2, I'll look to cover that off. I'll buy the yes on the other side of it for less than $20, hopefully less than 15, and then see if it turns around and it rallies. If we're weak, if we're strong early, I'll definitely sell that. I may be a little hesitant if we flush, but if we rise and blow through 11.4 early, get up and push that 11.5 that we did yesterday, that we did today, I'll cover that one off because I'll sell and lock that one in. And then I may do the same thing I did today and double down on my price at 11.2 and see if we get an early move off of the high to give me some money off of that one. So I'm buying both. Like that makes sense.
What's interesting to me about the way you're doing it versus the way that I'm doing it, it's like I'm buying every yes and every no. I'm not covering any of them. So I'm either like if I buy a yes and it's running my way, I look to see what the no is versus like you can sell a yes or you could sell a no, everybody. So you're buying a yes or you're buying a no and you can cover it any time. But what I'm doing is if I really like it and like let's just say, it's going my way, I look at the no and go, how far away is it? Look at like kind of what's happening. For example, if we have something that's running at the end of the day where it's about to close above my strike in a weak market, I'm just buying some no's immediately because I'm like, you know what? They could easily screw me on the close versus like trying to cover it. So I just been buying both sides because the one thing that's cool about this, there's no fees on this right now. So there's no commissions. There's no exchange fees. You can trade. It's just, you're just trading the dollar amount. So I think it's whatever strategy.
I like the yes on the 11.4. I just don't. I would hold it if we reverse off early weakness. But if we go early like we did today, then it's going to be the same plan. I'm gonna buy the yes once it blows through.
Last one for the day, S&P. Jimmy, what are you thinking? Right now the strikes are 36.75. And 36.50 and then 3,700. So it's really $25 wide, but we're at the 36.70 right now. And the yes is 10.75.
You know what though? Like I feel like we're, if you've watched like this market and the way it's traded, it rips, consolidates, rips, consolidates, rips, consolidates. So, we've had a rip. We're consolidating right now. Like, it could be lower, but like at every juncture and at every consolidation that we've seen, like they wait for that next data point. So like at this point, we could be kind of trading in this range before the next major data point comes up. And maybe the next major data point is ECI on Friday, or PCE on Friday. So when I look at like a market like this, like I feel like, all right, I'm ready to like kind of sell strangles. So like as this market like reaches either ends of this range, I'm going to be hitting the outer, like I don't think we're going probably anywhere until Friday, maybe. You know what I mean? The way this is like chopping around, like we might make a slightly lower low on some days that are a little scary, and we might make a slightly higher high on some days that seem, during this week. But like that's what we keep doing in the market during the week. You know what I mean? Like we make these big rips and then we like stay in these ranges. So we're in this range right now. So I'll be looking to like play the ranges and kind of. I'm not doing any one-off trading. I'll be selling the really outside stuff and saying yes to the inside stuff.
What's the price on the 3700s? What's the yes on the 3700s?
So the 3700s yes right now is the 3675s. Give it a second. I have my phone off. And 3675s are just 1050 each. So let's see what the 3700s
are. Okay, so 3700s are probably going to be about $6.
Yeah, for some reason my phone's not updating, but it's exactly.
Okay, I like those. I want those. I like those.
Yeah.
All right, boys. And you know what? You don't even have to be bullish, and you don't even have to be like, oh, a major squeeze is coming up. You can just be like, I like this range. I like 30. We're gonna touch it again. You know what I mean? And like as Tom's making his decision, he's like, he's not getting overtly into like his thesis of bullish or bearishness. He's just like, I think we'll go there again. I think we'll see it again. You know what I mean? Yep. And that's how you make money on this product.
Yeah, exactly. I'm with
that. I like the 3700s. If it gets up in the 3725 area, I'm probably locking it in. Just that simple.
Yeah.
Bam. Yeah.
All right. Boys, we made it through the first hour. We made it through our first hour together. It's been a pleasure.
Oh my God.
Listen, if Canny,
good luck with the hurricane, brother. You got shit to deal with.
The brain is like way bigger than I thought, and I don't know that I like that.
Look how intimidated he is now, Jimmy. He's freaking out.
I want the fucking glass. I gotta get those. Then maybe I can have an intelligent conversation with him. If we're going to talk about Eurodollar, or natty gas,
the good thing,
freaking out, man.
Calendar spreads.
The good thing is we got your shirt changed tonight, because that would have been a fucking disaster if you rocked that original shirt here tonight.
Can we talk
about that thing changed. We'll work on the glasses next week.
And Nvidia and stocks like that next week. Can we have a little bit more fun?
Hair, then we'll go tan. Like there's a lot of things we're going to touch on, but we'll go glasses
Jimmy,
next week.
Soon.
Dude, enjoy your tan defeat, your tan victory right now. I swear I'm going to lay out. Listen. As soon as I move to Florida in a week and a half, I'm going to lay out for an hour and a half every day.
And you'll look the same. I'm darker than you.
You'll die before you beat me. That's the problem.
I will probably
look cancer and you'll die.
My wife, because Lacey's not going to let me outside unless I'm lathered up in 50.
All right, everybody. Make sure you follow these two maniacs on Twitter. Go to placeyourtrades.com. Get your free trades. Sign up on the email list. That's how you help support this podcast. And make sure you claim your trade.
It's great talking to you guys. And I can't wait to talk to you again next Monday, bro.
Always fun.
Peace.
Always fun.